Look, cash isn't just sitting there doing nothing. It's a weapon. It's a mathematical edge. It's your shield when everything goes sideways. Most people treat money like it's this emotional thing, something tied up with fear and greed. But that's the trap. Money doesn't care about your feelings. It's numbers, pure and simple. And the person who gets that, who really understands it's just a system of numbers, they're the one in control. The person who feels it, they're a slave to it. We're not here to teach you how to make money. We're here to show you how to change the rules of the game. Because here's the truth, in finance, winning isn't about who earns the most. It's about who never has to leave the table when they lose. Think about that for a second. The game isn't about making the biggest score. It's about staying in the game long enough that the math works in your favor. The biggest obstacle to success, it's not your skills, not your capital, not even technology. It's your emotions, fear and greed. Those two forces drive millions of people every single day to make mathematically stupid decisions. You buy a stock, it goes up, you're happy, it drops, you panic. Every time this cycle repeats, you get more emotional, less logical. I see this constantly. People who are calculating and smart before they put money in become complete strangers to themselves after. What we're doing here is teaching you to strip the human element out of your decisions, to build what I call zero emotion discipline. Because money isn't a feeling, it's a tool, it's a system. When you see it that way, you remove all the psychological weight and turn investing into science. A process where one failure can't break you because the system doesn't rely on individual wins. It relies on statistical advantage and discipline. Now, here's something you need to burn into your brain. Financial freedom has nothing to do with how much money you have. It's about statistical advantage and disciplined execution. You can have $1 million with no system and lose it all in 3 months. I've seen it happen. Smart people, educated people, people who should know better, but give someone $5,000 with the right system, and they can 10x it in 5 years. What's the difference? The system. The system separates outcomes from decision-making. A systematic investor never says, this time it's different, because they know it's never different. Math follows rules. Emotions don't. And that's the core of this whole thing. You either follow math or you follow your feelings. There's no middle ground. A lot of things in life are subjective, sure, but math never is. 2 times 2 is always 4, whether the market's up or down. And cash is your mathematical reality. Let me ask you something. What's the difference between a gambler and a casino owner? Both want money. Both take risks, but the gambler believes in luck and hitting it big once. The casino owner knows that a tiny mathematical edge, that little percentage called the house edge, will inevitably win through millions of repetitions. The casino watches the gambler win and smiles because they know math is on their side, and over time, math is inevitable. A gambler can win $10,000 in one night and think they're a genius. A casino can lose $5,000 in one night and still know they're winning, because this game isn't about one night. It's about 1,000 nights. And over 1,000 nights, mathematical advantage always wins. Think about Vegas. Every single day, someone walks out of a casino with huge winnings. The casino doesn't panic. They don't change their strategy. They don't even blink, because they know those wins are built into the system. They're expected. They're part of the math. What matters is the aggregate, the total, the long run. Our goal here is to turn you from a gambler into a casino owner. You're not going to rely on getting lucky once. You're going to create small, consistent, statistically verified advantages and apply them over and over. Because the system isn't built to win big ones. It's built to win small 1,000 times and never get kicked out of the game. That's the key. Staying in the game. You can't win if you're not playing, and you can't play if you've blown up your account. Now let's get to the heart of this, cash. Most investors think cash is dead weight, something that's just reducing their return. They say every dollar needs to be working, so they put 100% of their money into stocks, crypto, real estate, whatever. I call this the 100% allocation code, and it destroys people. They don't understand what cash actually is. Cash is a mathematical option. It's optionality. Cash gives you the power to act when everyone else is frozen in fear. When the market crashes, everyone's selling because they have no cash and they've got debts. You're buying because you've got cash and you've got no fear That's mathematical advantage. Cash is the only asset that doesn't correlate with everything else. When everything falls, cash just sits there and waits. It's your option. It tells you that you can make choices. And the power to choose is the most valuable power in finance. See, here's what most people miss. They think being fully invested means they're maximizing returns. But what they're actually doing is maximizing risk and minimizing options. When you're 100% invested and the market drops 30%, you've got two choices: sell at a loss or hold and hope. That's not strategy, that's prayer. But when you've got cash sitting on the sidelines, you've got a third option: buy more at discount prices. That's the option the fully invested person doesn't have. They're stuck. You're free. And freedom in the market is everything. Think of it like this. You're a bridge engineer. You're building a bridge with a max load of 1,000 tons. You design it for exactly 1,000 tons. You design it for 2, 3, maybe 4,000 tons. Because, life throws curveballs. Strong winds, earthquakes, unexpected heavy loads. If your bridge doesn't have a safety margin, it'll collapse one day and kill everyone. In investing, cash is your safety margin. It's what lets your bridge carry that extra weight. If you've dumped all your money into stocks at the market peak, you're testing a 1,000-ton bridge with a 1,000-ton load. And the first unexpected hit, the first crisis, the first panic, your system collapses because you've got no safety margin. When an engineer builds a bridge, they say, I need to be ready for the worst case. Investors need to say the same thing. The worst won't always happen, but you've got to be ready for it, because those who are ready survive and those who aren't become history. I've watched people with huge portfolios get completely wiped out in 2008 and 2020 in every crash because they had no margin of safety. They were right at the edge, and when the wind blew, they fell. The people who survived, they had cash. They had room to maneuver. They had options. Now, here's the most important thing I'm going to tell you. And I need you to really think about this. A system that survives every crisis will mathematically produce better results than a system that chases maximum profit but fails once. Read that again. This is the survival philosophy. Success isn't in short-term gains. It's in the sustainability of the system. You can make 100% in 1 year and then lose everything. Or you can make 15% every year and never get forced out. Which system wins after 5 years? The second one, because the first one doesn't exist anymore. Math shows that the surviving system is always the winning system. And to survive, you need cash, because cash is your safety margin, your psychological shield, your mathematical option. It's the same in nature, right? It's not the strongest species that survives, not the smartest, but the most adaptable. Same in finance. It's not the most aggressive investor who survives. It's the most adaptable and cautious one. Look at the dinosaurs. Massive, powerful, dominant. Where are they now? Gone. Look at the cockroach. Small, unimpressive, cautious. Still here after millions of years. That's not a coincidence. Survival beats strength every single time in the long run. And in investing, the long run is all that matters, because that's where wealth is actually built. The market's a chaotic mess. It's not based on math. It's based on human emotions. Fear and greed run the show. And you see those emotions most clearly in investors without cash, because an investor without cash is a forced investor. They're forced to sell, forced to buy, forced to make emotional calls. An investor with cash is free. They wait for the market's fear waves and use them. They see the greed waves and avoid them, because they know the market's fear moment is their buying moment, and the market's greed moment is their selling moment. This is swapping emotional logic for mathematical logic. This is turning a gambler into a casino owner. Warren Buffett said, "Be fearful when others are greedy, and greedy when others are fearful." But those words are easy to say, hard to do. When others are greedy, the market's peaking and you need willpower to sell. When others are fearful, the market's bottoming and you need cash to buy. Willpower and cash, those are the two pillars of the system. You know what's funny? People quote Buffett all the time, but they never actually do what he says. They love the quote, they share it on social media, but when the market's crashing and everyone's panicking, they panic too. Why? Because they don't have cash. They can't be greedy even if they wanted to be, because they've got nothing to deploy. Buffet's advice only works if you've got the ammunition to execute, and that ammunition is cash. Now let me give you concrete rules you can actually use, because this isn't just philosophy, it's practice. First, never put 100% of your portfolio in risky assets. You need cash reserves. This reserve should cover at least 6 months of expenses, ideally 12, best case 24. That's your safety margin. This isn't just investment advice, this is life advice. When you've got 6 months of expenses sitting in cash, you sleep differently. You make decisions differently. You don't panic when the market drops because you know you're okay. You're not going to lose your house. You're not going to miss rent. You're not going to starve. That psychological security is worth more than any potential return you're missing out on. Second, don't view cash as missing out. View it as power to seize opportunities. In every crisis, ask, what can I buy? Not, what should I sell? This is a complete mindset shift. Most people see a market crash and their first thought is, oh God, I'm losing money. What do I sell? The systematic investor sees a crash and thinks everything's on sale. What do I buy? Same event, totally different response. One person's operating from fear, the other's operating from opportunity. Guess which one builds wealth? Third, create mathematical advantage and repeat it. Don't risk everything to win big ones. Make small, consecutive, statistically verified decisions. This is the casino owner mentality we talked about earlier. You're not looking for the home run, you're looking for the consistent base hit. Singles and doubles, over and over for years. That's how you build real wealth. Fourth, build zero emotion. Discipline. Before every decision, ask, was this logic or emotion? If it was emotion, delay the decision. I can't stress this enough. Emotional decisions in investing are almost always wrong. Not sometimes, not usually, almost always. When you feel that urge to buy because something's going up and you're scared of missing out, that's emotion. When you feel that urge to sell because something's dropping and you're panicking, that's emotion. The solution? Wait, sleep on it, come back tomorrow with a clear head. If the decision still makes sense, mathematically, after 24 hours, then do it. But 9 times out of 10, you'll realize it was just emotion, and you'll be glad you waited. Fifth, protect the system, not the profit. The system's survival is the only guarantee of long-term success. This is counterintuitive for most people because we're taught to maximize profit. But maximizing profit often means maximizing risk, and too much risk breaks the system. I'd rather make 12% a year for 30 years than make 50% for 3 years and then blow up. Why? Because after 30 years at 12%, I'm up over 2,900%. After 3 years at 50% and then blowing up, I'm at zero. The system that survives wins. Sixth, always ask yourself 3 questions. Does this investment fit my system? Does it fit my risk tolerance? And most importantly, can I accept this without emotion? If the answer to any of these is no, don't do it. It's that simple. You don't need to take every opportunity. You just need to take the right opportunities, the ones that fit your system. Holding cash isn't weakness, it's strength. It's your strategic weapon. Everyone in the market's fighting FOMO, the fear of missing out. They're saying, late, I gotta buy now. You're saying, I'm waiting because my position lets me. That's a psychological shield. Cash protects you from emotional decisions. It gives you the ability to watch the market's fear and greed waves from the sidelines, and the person watching from the sidelines always makes better decisions than the person in the middle of it. Think about a football game. The player on the field can't see everything. They're inside the emotions, under crowd pressure. The spectator in the stands sees everything, makes calm calls. Cash puts you in the stands. It gives you perspective, and perspective is everything in investing. When you're in the middle of a market panic with no cash and lots of debt, all you can see is your losses mounting, you're drowning. But when you're sitting on cash watching that same panic, you can see the opportunities. You can see which stocks are being unfairly punished, which sectors are oversold, where the real value is. Same market, totally different view. That's what cash gives you. So why don't most people get this? Because they're sold wealth, not systems. They're told, this stock will double. This crypto will make you a millionaire. Nobody tells them, build a system, protect it, let time work for you. Wealth is a result. A system is a process. And process always beats result because the right process always creates the right result long term. The wrong result destroys someone with no process. You got to build a system, not wealth. Financial freedom doesn't depend on how much capital you have. It depends on statistical advantage and disciplined execution. You can have 10 million with no system and lose it in a few years. You can have 5 grand with a system and multiply it 1,000 times in 10 years. The difference isn't capital, it's the system. History proves this over and over. 85% of lottery winners go broke again within 5 years. Why? Because they got money but no system. They never learned how to manage wealth, how to protect it, how to make it work for them. They just got a big number in their bank account and thought that was enough. It wasn't. Money without a system is just a countdown timer to zero. The media loves to sell you on the idea that one big score will solve all your problems. Win the lottery, get that IPO, catch that 100x crypto. But that's a lie. One big score without a system just means you'll lose it all and end up back where you started, except now you'll know what you're missing. That's even worse. The real path to wealth is boring. It's systematic. It's discipline. It's consistent small wins compounded over time. That's not sexy. That's why nobody talks about it. But it works. What makes this work is that it's written with cold, hard, unwavering mathematical logic. We're not selling you false hope here. We're not going to tell you everyone can be rich. No, not everyone can be rich. But everyone who builds a system, stays disciplined, rejects their emotions, and uses cash as a strategic weapon can achieve financial freedom. That's the truth. And if that bothers you, you're not ready yet, because this system doesn't offer comfort, it offers reality. It tells you success isn't easy, but it's possible. It tells you fear and greed are your enemies. It tells you cash isn't weakness, it's the foundation of your strength. And if you accept that, you're not a gambler anymore, you're a casino owner. You're not the market's toy. You're the market's master. The difference between being rich and being wealthy is this: rich is a number in your bank account. Wealthy is a system that consistently generates that number. Rich can disappear overnight. Wealthy is resilient, anti-fragile, built to survive anything. You want to be wealthy, not just rich. And wealth comes from systems, not scores. Bottom line, cash isn't passive. It's a strategic weapon, a mathematical advantage, a psychological shield, declaration of financial freedom. It gives you the power to act when others are paralyzed. It lets you turn the market's fear moments into buying moments and greed moments into selling moments. It guarantees you'll survive every crisis. And most importantly, it lets you build a system because the system is superior to everything. The system beats emotion. The system beats luck. The system even beats skill, because the right system can turn an average person into a genius investor, while the wrong system can destroy even a genius. Which side do you want to be on? The gambler's side or the casino owner's side? The side of emotional decisions or mathematical logic? The side that holds passive money or the side that uses it as a weapon? The choice is yours. But remember, this choice is also a mathematical one. And mathematical choices are never wrong. They're either correct or they destroy you. Choose correctly. Build your system. Build your system. Protect your cash. Reject your emotions. And wait, because the casino owner knows they never rush. They know time's on their side, math's on their side, the system's on their side, and time, math, and the system always win. This isn't coincidence. It's inevitable mathematical outcome. And you can be part of it if you understand the system, accept it, and apply it. Start right now. Don't wait, because every day you wait is a day without a system. And a day without a system is a lost day. Here's what I want you to do after watching this. Sit down and calculate how much cash you actually have right now. Not investments. If it's less than 6 months, you've got work to do. Start building that reserve before you make another investment. I don't care how good the opportunity looks. I don't care how much FOMO you're feeling, build your safety margin first, because that safety margin is what transforms you from a gambler into a casino owner. That's what gives you the psychological freedom to make rational decisions when everyone else is panicking. That's what lets you buy when there's blood in the streets, as the saying goes. Once you've got your cash reserve built, then you can start thinking about systematic investing. Then you can start looking for those small, consistent, statistically verified edges. Then you can start compounding your wealth in a way that's sustainable, that's resilient, that's built to last decades, not just years. This is a marathon, not a sprint. And in a marathon, the person who paces themselves always beats the person who sprints the first mile and collapses. Be the person who paces themselves. Be the casino owner. Be the systematic investor. Be the person who survives every crisis and comes out stronger on the other side. That's how you win this game. That's how you achieve real, lasting financial freedom. Not through luck, not through one big score, but through discipline, through systems, through cold mathematical logic, applied consistently over time. And it all starts with cash, your mathematical option, your psychological shield, your strategic weapon. Never forget that.